Okay, what is a health insurance marketplace? State options. There's three ways they can do. Two ways they can be. Well, really three ways. They can be set up by the state. They can be set up by the Health and Human Services, or they can be done in a partnership with the state and with the feds. Okay, do nothing. That's what Christie's decided to do. He's going to let the feds come in and set it up. This count is a little outdated because, again, it changes almost on a daily basis. 19 have declared they're going to set up a state-based exchange. 25 have defaulted to federal exchanges, that's us. And 7 are planning a partnership exchange. The deadlines. They have to be open, as of this moment, they have to be opened on October 1st to take enrollment for January 1st. Tom?
And why would a state incur the expense of setting up a state exchange when they can just default?
Exactly, and that's what Governor Christie said. I was at a talk he gave on this, and he said, my biggest problem is that they want us to create a board of 6 members getting paid $50,000 a year each, and they cannot be in the health insurance industry. It sounds like a cush job to me, but and that's why he just said, "Look, you guys want it, do it yourself." Small business health option program, SHOP. Small employers, again, it says up to 100 employees, but in Jersey it's going to be 50 employees, can go to SHOP and set up a plan instead of your current group health plan. Before 2016, states can define small employers. In 2017, any size employer can go to the exchange and let them take over running your health insurance plan. Individuals can be eligible for tax credits, subsidized coverage, and they can be eligible if their company's plan isn't compliant, and we'll get to that in a minute. Tom? Qualified health plans. Okay. What type of plan are you going to be able to purchase in the exchange? Must provide essential benefits, limit cost sharing, as we talked about in small group, where it's $2,000 maximum deductible. Provide bronze, silver, gold, or platinum coverage. Bronze is 60% of the covered expenses, silver is 70%, gold is 80%, and platinum will be 90% coverage.
So in looking at the small business option, this shop, just from projections that we know now, is it cost beneficial for small businesses to let the exchange do it for them, or you don't know? Or?
It can't be. And I'm just saying that my personal opinion, it can't be, because I don't know how many of you have shopped gone to Horizon's website for health insurance. Do it just as an exercise. When you get back to your office tomorrow, go to what's the Horizon Blue Cross Blue Shield.com. Go and go as if you were applying for health insurance. You will be shocked. It's incredibly expensive for a plan that doesn't even, I guarantee you, doesn't measure up to the plan you currently have.
And keep in mind that the ones that look attractive and affordable, when you look very closely, they cap what they will pay on an MRI or a CAT scan or a PET scan at $500. Anyone that's ever seen an EOB for an MRI knows that they run about $1,500 to $1,700 a pop. So there's certain things that are hidden below the surface with policies that look very attractive price-wise that may not do what you need to do when you have these emergencies.
So are you saying that there's a smoke and mirror between the small business and the exchange, that there's some kind of intermediary between that's confusing the issue? Is that what
No, it's just that, just as a fact of life, they're still going to be based on individual rates. Okay, a group of, say, 10 employees, the owner says, look, I'm going to set up a shop plan, you do what you want to do. It's still going to be individual plans. and they're still going to be very expensive.
So the government is shopping out our health plans through the exchange. They're the ones doing the shopping.
Right, and when you go, if we went back to the web-based, what's going to happen is when you put in all of your requirements and say, I want a bronze plan, okay? You're going to have, it's going to pop up just like Orbitz, just like all of them. Instead of having American, Continental, whatnot, you're going to have United Healthcare, Horizon Blue Cross Blue Shield, AmeriHealth, and it's going to show you different choices from these carriers. And it's basically going to be their individual rated plans. Right. At least you get William Shatner with Priceline.
Can I ask one question?
Sure, go ahead.
Is there a plan in place then to help small businesses create a group through the exchange?
The navigators. Going back to the navigators. Now, hopefully, the New Jersey Exchange will permit insurance agents to work it. And if that's the case, you'll be able to keep your insurance agent and they'll be able to show you what a shop plan will be or an individual plan will be. Or, alternatively, you can still go to the shop network and get a rate and go to your insurance broker and get a rate and compare what works best.
Okay, thank you.
Okay? Exchange premium assistance. Employee eligibility will trigger employer penalties. We'll get to this in a minute. Employees who do not offer coverage are not eligible for the government programs like Medicare, meet income requirements less than 400% of the federal poverty level. Employees who are offered coverage are not enrolled through an employer's plan, not eligible for government programs, meet income requirements less than 400% of the federal poverty level. That's an interesting concept right there because the federal, that 400% equates to about $80,000 for a family. So if you have a family making $90,000 and have 4 kids, they're not going to be eligible for any kind of assistance. They're going to have to pay the full freight. Okay? Employers' coverage is unaffordable, and we'll get to this, greater than 9.5% of coverage or not of minimum value. Next slide, Tom. I think that's going to be, no. The large employers pay or play rule. Either you offer proper coverage or you're going to pay a penalty. A big bugaboo going around is if you offer a plan and one of your employees go to the exchange, you're going to have to pay a penalty. That's not true. It's categorically wrong. If you offer it, we'll get to that in the next slide. If you offer a plan and it's affordable and it meets the requirements, all of your employees can go to the exchange and you still won't have to pay a penalty. Employees to employers with 50 or more full-time equivalent employees. Again, if you're less than 50 employees, you do not have to offer coverage. Penalties apply if, well, let's go to the next, okay, this is it. This is great. I mean, if you look at this, it's very easy to follow. It's in the handout. Top box, does the employer have at least 50 full-time employees? The answer is no. There's no penalty. Okay, there's no penalty even, again, if they offer coverage, don't offer coverage, it's compliant, non-compliant, it's under 50 employees. And that's where, again, a lot of people are getting the concept, well, I'll just have 40 full-time employees and the rest are going to be part-timers. Well, again, going to the FTEs, that's not going to work. Does the employer offer health plan coverage to its employees? The answer is yes. Did at least, let me get my, smoke them if you got them. Okay. Does at least one employee go to the exchange and try to receive the tax credit? The answer is yes. The employer must pay a penalty for not offering coverage. okay? But if we drop down, does the insurance cover at least 60% of the total plan cost? Did at least one employee go? Again, just gonna pay a penalty. Now, if your plan, summarily, rather than go through the whole thing, summarily, if your plan is compliant, meaning it covers at least 60%, the bronze level plan, and if it's affordable, if the least paid employee doesn't have to contribute more than 9.5% of that employee's annual income, the plan is affordable and there's no penalty involved. Okay? If your plan doesn't cover at least 60%, if it's a catastrophic plan, then you're going to pay a penalty. Or if an employee has to pay more than 9.5% of the employee's annual income, you'll pay a penalty. Sir?
60%, is that based on, someone might take a single, because they have no dependents, so 60% is one number for somebody.
Oh, no.
What about a family?
Okay, 60% of benefits paid. The bronze, remember how we went through the bronze and silver, gold, platinum plan?
So it's not
If the plan complies with that bronze level coverage, then it's compliant. It covers 60% of the expected
so
costs.
The employer's contribution piece really comes in that last.
The last, the 9.5%. For instance, I'll get to you in a second back there. An employee makes $20,000 a year, really low-level employee, and so 9.5% of that would be approximately $200 a month, just about $200, $180 a month, and your plan costs $400 a month. As long as he doesn't have to pay more than $180 towards the cost of the plan, it's compliant, it's affordable. Now, as John pointed out as we went through it yesterday, that's good for the first year. Now, the second year it goes up, his cost remains static unless he's gotten a raise. So the employer has to pay more for that particular employee.
The 9.5% is that if someone takes a family, that's a bigger number.
It's only, again, that was one of the things when it first came out, when this concept first came out, it was the family income. But then it became apparent that the employer has no way of knowing what the family income is. So they backed off and said, okay, it's going to be only for the cost, only for the W-2 income of the employee. I think we got a bunch of questions back. I think we had one back there first.
Yes, your first example, you have 4 employees. Are you saying you don't have to provide a coverage for them?
You don't have to
Less than 50?
Right. That it's paradoxically when it first came out, it was thought that the small employer was really going to get hammered. But as it turned out, if you employ under 50 employees, you do not have to provide benefits at all.
Now, but on the other hand, you've got these 4 employees, you don't provide coverage, but they have to enroll in some type of insurance plan or they're penalized?
Right. They'll have to go to the exchange. Unless you avail yourself of the shop benefit. The small health plan exchange. And then, let me get the gun back to you first.
We did the HSA, how did they calculate the 60%?
Well,
First, Trump is coming out.
If you have an HSA, and again, you're going to be, if you're small, let's talk about a small group. You're a small group and your deductible isn't greater than $2,000, which it can be, and your co-insurance is going to be now 60 or 70 or 80%. As long as it's, say, 70%, it's going to be deemed okay because you're going to cover at least 60% of the expected charges.
What if your deductible is higher than the 2,000, 4,000?
Again, if you're a small employer, can't be. Can only be 2,000, 4,000.
Can only be for what purpose?
According to the maximum expenses portion of the law. Under 50 lives, the maximum maximum deductible you can have is $2,000, $4,000 for a family.
What if you have 2,500, 5,000?
It's gonna the carriers are not gonna offer that plan anymore.
I just signed up for it.
That's this year. Next year when you get
2014.
when you renew, right? It's gonna be they're gonna not offer that $2,500 deductible. Listen,
Just to frame the 9.5% that you were talking about, in current state, New Jersey state regulations, is it true that you must pay, the employer must pay 10% of the premium of any employee?
the way the law reads, it has to be the employer must pay 10% of the total cost of the plan.
Oh, of the total?
Cost of the plan, right? You have a bunch of married people thrown in there. It's 10%.
Okay, thank you.
Did I see another question back there somewhere? This is the meat of the whole act right here, the pay or play concept. And again, most people thought that if one employee went to the exchange, you had to pay a penalty. Well, that's not true. Okay, even if you get down this far, the penalty is going to be $3,000 only for those employees that go to the exchange. Tom?